I would say 95% of the accountants out there have no idea how SMSF works.
You need to have their trust name on the purchase contract of the property, and it is done properly. If you have terminated the contract, then you lose your super money because you paid the deposit, but you're not getting that deposit money. When they use the bank account for personal use, they buy copies in there. That's not allowed. You can't do that. You can't touch that money.
Buying and selling is very, very tricky when it comes to super, and you can trigger a lot of taxes with double stamp duty or normal taxes. Hello and welcome to another episode of Het Mobile Property Podcast. This is an episode 2 of the last topic that we were discussing in relation to your super. Now, this topic is more of a scaremongering topic. We are going to talk about the breaches for superannuation or SMSF. We are going to talk about what repercussions do you get when you make breaches or don't listen to the AT or don't listen to ASIC. We have Sohail Merchant, Director for TaxWiser, CFO for Investor Partner Group here with us today. Hello, Sohail. How are you today?
Good, thank you. How are you?
I am great. Thank you for coming back. Superannuation. So we've been talking about super and we've been discussing about all the good stuff of super and all the strategies. But there's massive penalties attached to it when you talk about, superannuations and breaches and the sole purpose test and, related party transactions. So we're going to break all of that down today. But let's start off with the sole purpose test and breaching of the sole purpose test. What does that really mean?
Sole purpose test means that your super money is for your retirement. That's the only purpose of your super money. Okay, if you breach that, you are in a huge trouble with tax office. So you have to be careful how you invest your money in your super.
Okay, and how do we breach it?
Biggest breach I have seen, because I've been auditor for SMSF as well, in-house loans. People lend money to other family members as well.
Yeah.
In-house loans means that you're not allowed to live in the property you bought for in your SMSF. So it's a huge no. So you're breaching your sole purpose test, and there are huge penalties attached to it. Yes,
and it could be as simple as because you have access to the bank account where super money is sitting. It could be as simple as, hey, I need to transfer $20,000 to this person who went to Boat City, give me that money back literally tomorrow. Or, hey, I want to transfer 20,000 from this account and my account balance is reached. So I'm going to transfer it from super account and I'm going to bring the money back to my to transfer tomorrow. Is that true?
No, I mean, you can't do that. People treat the SMSF bank account as their normal business transaction account or everyday transaction account. It's not that. You can't touch super money. Only for investments and nothing else. You can't use it for private use. You can't lend to your family members or friends and other people. It's not allowed.
And even if it's like a few hours, even if it's a single transaction right in an hour, it's technically a breach, right?
Even if you go overdraft of 1 cent in your SMSF account, it's a breach.
Yeah,
you can't.
And it's mandatory reporting, right? A lot of people don't understand that this is mandatory reporting.
Yeah. So if auditor picks up breach in your SMSF, they are required to report even the minute breaches. They are required to report.
And how crazy does it get? How, you were talking about an example where a breach happened, and what length do ATO goes?
The ATO
or ASIC goes?
ATO start with education. If the trustees are in breach of legislation or breach of anything in SMSF, any laws, they start with education. They say, you don't know, let us help you and get there. But when you start doing it again and again, then they become heavy-handed, and then the maximum penalties are applied. There's jail terms there as well. You can get imprisonment for 5 years, and there are penalties of hundreds of thousands of dollars, the maximum amount.
Yeah, and so people take this very lightly out. When ATO is, aligning this to jail term, there is, liabilities attached to this, and so there's all these very serious
as well. Yes, so you can be disqualified as trustee. And then you won't be able to become trustee for your SMSF again.
Yeah.
So you have to move that money back to your super funds, and then you won't be able to invest the way you want to invest.
So breaking these SMSF laws, it's not just about ATO, slapping them on the wrist and fining you. They can basically tear your life apart if they really want to.
Freeze your assets in SMSF as well, and they can charge 45% or 66% penalty on the value of assets, basically. So they can take most of your assets from the SMSF if you breach laws in SMSF.
And so people take this very lightly, and especially one of the things that I see is related party transaction, where people don't understand what a related party transaction is and why it's not allowed. So talk a bit about that.
Yeah, so there's a special terms with related party or Part 8 associates in SMSF. There are different people who are called as associates of yourself or members associates. You can't give money to them, even though for financial reasons. If they are in dire need, you can't help, then it is not allowed. That you can't give money to yourself. You can't lease out to someone who's related to you, the property, if you have a property in there. So yeah, it is a huge breach.
But I mean, there are some exceptions to this, right? I know I read it somewhere or I heard it somewhere where we were talking about if there's a medical emergency, if they are really in grave financial circumstances, you can make a request to ATO to release some of this SMSF money.
That's right. So not just SMSF, any super money, you can go to retail super. So if you are on compassionate ground, you can request ATO to release some money for your medical emergencies, even for your mortgage repayments. You can request that we are struggling financially, so we need some help from your super. The super.
And I mean, it's not at your discretion how financially distressed you are, because for some people, buying an expensive car is financial distress. So
it's not like that, no.
Yeah.
But ATO and Medicare, they combine, they decide that how much maximum amount you can take out is $10,000 on a compassionate grounds.
And I remember during COVID, the government allowed $20,000, for people to tap in.
Yeah.
And there was a lot of people who, took out this $20,000 and ended up buying cars up, paying up their mortgages, right?
That's true. But it was not allowed to use for personal use. It was just to support you financially during the bad times.
Yeah. And so what happens to your tax situations if ATO decides your property arrangement is in a breach or trust rules are in breach? How, what sort of penalties are we talking about?
They start from thousands of dollars to hundreds of thousands of dollars. Okay. So if there's a small breach, then they can charge you $1,500. But this penalty is per trustee. If there are 2 trustees in SMSF, each trustee will be penalized. That's why usually we suggest go for company as a trustee. If there are 4 people and 4 trustees, individual trustees, everyone get a $10,000 penalty. So it's a $1,000 penalty.
Yeah.
So the severity of the breach dictates the amount of breach. There's a huge list on ATO website. There's a penalty units, the 60 penalty units or 5 penalty units, and each penalty unit has a number attached to it. So it depends on the breach. The sole purpose test, the maximum penalty is $16,500 per trustee, and that's 1 unit. So if they decide that you are breach of 50 units, then 16,000 multiplied by
50.
So, but each trustee, so that's important.
Yeah. And a lot of people, coming back to our original point that you can't take this lightly. You need to think about, the breaches. You can't hide under the carpet because you will be caught. There's mandatory auditing requirements around this. So, and, a lot of people think that, I'm more going to, get my tax returns done or audits done for SMSF and ride the freeway for 2 years or 3 years. For how long? For
it is a highly regulated industry. You will be caught one way or another. So again, record keeping, if you not keep the proper records, it's another breach. So there are penalties attached to it as well. You are required to keep proper records, even if you're not getting the tax done. If ATO says after 4 or 5 years, you haven't done anything, show us what have you done. If not, then it's trouble.
Yeah. Coming back to the high regulated, high compliance environment, let's talk about the borrowing side of things, because there's a lot of risks attached to the borrowing as well. So how does lending in super differs to lending in personal?
Okay, so I think we previously discussed as well. If you are borrowing for investment in your SMSF, you're allowed to borrow to purchase investment, including investment properties. There's a special term which is called limited recourse borrowing arrangement. You're required to prepare, set up a bare trust and custodian trust to purchase a property when you want to borrow in super fund. even members can lend money to their own super. There must be a LRBA done. It's called a related party limited recourse borrowing arrangement. You are still required to do proper documentation and everything. If you don't do properly, you are in breach of your SMSF.
Don't get yourself taken on a ride by property spookers, so-called property investment advisors, or buyer's agents who are selling house and land packages or off-the-plan properties or apartments. Get yourself a copy of this book called The Millennial's Guide to Property Investing. This book is not just for millennials. The title suggests, but it's actually the most advanced way of investing in property. This book will relate to your clients, your colleagues, and other business owners. There are so many property spookers out there who have come out of the woodwork over the last 3 to 5 years, and there is so much misinformation out there that I had to write a book about all the F-ups that people can actually avoid in order to be super successful in the property investment journey. Some of these are really easy to identify, but they are so costly to fix once these mistakes are made. So it's a short book, it's easy to read, it has a lot of stories, it has a lot of examples, and it is a true guide for people who wants to do it themselves. My name is Moxin Reza. This is my story, and a lot of you will relate to parts of this story if you're not born in the riches and if you're trying to build a property portfolio that can last generations and help you improve your lifestyle along the way. So I give you a chance to come out there and have a read. Be kind, stay safe, keep smiling, keep investing, and please do check out the book. Banks take this lending very, very seriously, right? You would see when you're setting up these trusts, there is particular address of the property that is required. There are postcode restrictions, the banks would basically bring in postcode restrictions. So, why does all of that happen?
Because major banks are not there. The second tier, third tier lenders, they don't want to take too much risk because they can't tap into your other assets within the SMSF, not touch any other money in your SMSF. So they want to make sure that the property you are getting or any investment you're getting into and borrowing for, so it is very, very secure in their from their perspective. So that's why they put some restrictions, postcode restriction, address restrictions, and things like that.
Yeah.
So and interest rate is also higher in SMSF borrowing.
Oh, that's the risk margin, basically.
Yes.
So
that's true.
Yeah.
So that's why it is. You have to be careful when preparing all the documentation for the loan arrangement. Yeah.
And it makes total sense, right? A lot of the times people take that risk of, listening to, a property advisor or named property advisor or a sales agent, and they'll go out there and buy a property thinking that, hey, this property is in a whoop whoop town that no one has heard of. And they wouldn't even realize that, they would not get the funding and will sign an unconditional contract under these SMSF. So what are the repercussions there where you have signed an unconditional contract under an SMSF and the loan falls through?
You are stuck there. You won't be able to, if you are not able to purchase that property, then either you have to find someone else who can take that property, or lenders will force you to buy that property somehow.
Or the deposit is gone, right?
If you've terminated the contract, then you lose your super money because you paid the deposit, but you're not getting that deposit back.
Could it be like the ATO or ASIC can come back and say that you are not responsible with signing the contracts? And
when you set up your SMSF, ATO asks you to sign certain declarations that you are taking responsibility of managing your own money. So if you're not done your homework, then again you are in a breach. So you are required to understand, because you are signing a special trustee declaration time of signing. You must read all those documents, and they're gonna ask questions. Did you read that? Did you read that? So if you say no, then
people take this very lightly, right? There is so much stuff that is happening in this space. And look, we discussed in the last episode, 14,000, SMSF being created every year right now.
Right, yeah.
ATO has been, I would say a bit lenient because there was not a lot of, these that were being created. Now that there's a flood of people trying various different creative strategies and super, there's about time that they would start looking into this in a much more deeper sense and start regulating this and start penalizing this so that they can.
So not enforcing. Lots of breach has been reported every year to tax office, and they look at it case by case basis. So if they're not serious breaches, they ask the trustees to go back and do and get some education and fix the breach, basically. So they're mainly after advisor, the middleman, who is suggesting to go into the SMSF in the first place, for making them the example, because they are not giving the proper example. So the retail customer is gonna believe whatever the financial advisor are gonna say to them.
And look, I mean, in all honesty, I would say 95% of the accountants out there have no idea how SMSF works because they are not in this space and, let alone property in SMSF. And then when you talk about financial advisors, they're always against, buying a property in SMSF anyway, because they would rather do it under funds and the management, right? So there are only a handful of people who truly understand, how strategies work in super, how property strategies work on super, and how does all of this comes together and what you should and shouldn't do in order to protect yourself.
Yes, it is a specialty for accountants as well. Not everyone can become an auditor either. So when the borrowing arrangements came in 2007, people still don't know in 2025 how to structure the bare trusts and everything. Okay, so there's sometimes when they're signing the contract for the property, they don't even know what entity to put on the contracts. In our example, I've seen other accountants just saying put SMSF name in the borrowing. It's not correct. So it's a huge gap in, I guess, in terms of education. Lots of accountants never worked in SMSF industry. They don't know how to structure it properly.
Yeah. So what are the correct rules? What do you need to sign the contract? Is it the bare trust?
Yes. So especially in different states, there's a different rules. In WA, we found that you need to put all 4 entities on the contract. The contract is not valid. You're going to be charged huge penalties and stamp duty again. In Queensland, it is different. In Victoria, a little bit different. But generally speaking, you need to have bare trust name on the purchase contract of the property. And it is done properly. If you're missing the ACN, or even if you miss a letter on this, so there's a huge penalty, especially from the local estate offices.
And so buying and selling is very, very tricky when it comes to super, and you can trigger a lot of taxes with double stamp duty or normal taxes when you're buying or selling. Talk a bit about that, how complicated this is when we are talking about selling or taking an exit out of SMSF or rolling it back into retail, or deciding to go overseas. What are some of these?
It is a lower tax environment, so self-managed super fund, but people try to take advantage of that and do it incorrectly. But it is for your retirement, so you need to make sure that you follow the rules. There are tax penalties. Higher tax is charged when you are in a breach of some sort, and when you are moving away from Australia, you're going overseas for a timing or maybe permanent, then you can't keep that money in your super. You need to liquidate and move that money into your retail super environment, unless until you have a power then who is staying in Australia, then you can leave money. You can't, if you're going overseas, people make mistake of putting the contributions in. You can't contribute to your super fund if you're not an active member. So there are certain things they need to understand when they're managing their self-managed super fund.
So pulling this all together, if I say to you, what is the most common mistake that you see people make when it comes to super breaches or SMSL breaches? What is that one breach that you ask people to be careful of at any given point in time?
When they use the bank account for personal use, they buy coffees in the Africa. That's not allowed. You can't do that. You can't touch that money. So lots of people try to use the money just for 10 days, just for 90 days. You can't, you're not allowed with it. That's very common. And we are required to report that breach to tax office immediately. So now with this new environment where everything is reported to tax office live, they will know the breach quickly as well. So they're bringing lots of stuff, IT tech, in this space as well. So with the STPs and ESAs, and it is reported live to tax office.
And look, ATO is in the game of making money, right? Ultimately, that's what it is, right? And, they are revolutionizing as well. They are adopting to a lot of new tech. A lot of AI adoption is coming into place in ATO as well, right? So, with various different systems connected, there would be times where a lot of these breaches would be, You don't have to even wait for the audit to happen. You would automatically report it.
That's right. It's happening right now. So banks are required to report tax office that all the transactions coming into the bank accounts. They can quickly, AI can quickly pick up which is something is not right. So they don't need to wait for you to lodge the tax return at the year end. So they can quickly pick up.
Last but not the least, look, it makes sense to buy a property in super. It makes sense to think about super and set up a SMSF and use that to grow your wealth and have a comfortable retirement. What's also important to have the right team behind you, right accountant, right property advisor, right qualified property advisor. So how important is the team when it comes to all of this?
Because it is true that the self-manage means that you are managing your super money, but you are not. If you're not sure what you're doing, you need a team of advisor around you to create a proper strategy. You need investment strategy to run your SMSF. And to create that investment strategy, you need people who are actually experienced in that field, accountants or the property advisors.
Mortgage brokers and conveyancers, right?
That's right. And mortgage brokers, they don't even know how to do the LRBA documents, and they rely on accountants' advice or sometimes buyer's agent's advice how to do the documents. A team of advisors who understands, they should rely on those people. Basically.
Yeah. For viewers and listeners, look, it makes total sense to buy properties, but you need to be careful of the risks that are attached to it. You need to be careful of, what the breaches are and how do you go around avoiding it. You need to have a good team in place. And so if you have a balance, or if you are taking or ready to take a position in super, and if you're looking for a good team, you can reach out to us or reach out to Swale. You can reach out to our office at info@helpmebuy.com.au. Happy to provide you the support. If you have any scary stories in relation to people, going through these breaches or going through these stories, share it in the comments. Hit that like and subscribe button to support our community. Thank you for listening to us today. Take care, stay safe, keep smiling, keep investing. This is Moxin and Sohail checking out. Adios.
Thank you.